Top Biden cabinet officials will testify on Capitol Hill this week to defend President Biden's proposed budget, a big one. Republicans in Congress have long argued that excessive government spending hurts working families. Louisiana Senator John Kennedy, as a member of the Senate Appropriations Committee, will be parsing the president's budget. He joins us now. Good to see you, Senator. Thank you for coming in. Let's put the number up on the screen because I think it really has an impact when you write it out in full. 6.8. Look at how long this is. $6.8 trillion. It takes up an entire wall, Senator, to put that figure up there. There might be room for another zero or two. But this is a behemoth, one that Senator Grassley of Iowa says is, quote, a roadmap for fiscal ruin. So my question is, what are y'all going to do about it?
We're going to ignore it. I agree with you. The numbers, John, are breathtaking. We'll probably run out of digits at some point under the Biden administration, but we're going to ignore it. What we do will have a huge impact, though, on the economy. There's no way that we're going to get control of inflation without tanking the economy and causing other banks to go under unless we attack it on both the monetary side, like Chairman Powell is, and the fiscal side. And by that, I mean we've got to reduce the rate of growth of spending and debt accumulation, because every dollar we spend stimulates the economy and makes Jay Powell's job harder.
One of the big areas of controversy is the increase in defense spending. We'll put it up on the screen. Biden is proposing a 3.2% increase in defense spending. Look at what China's doing, 7.1%. Now, the U.S. defense budget is roughly almost 4 times that of China, but last time I checked, the yuan goes a long way when you're building aircraft carriers and putting bullets in guns.
Well, China, of course, doesn't have to reach a consensus on anything. All President Xi has to do is say that it's going to happen, and it happens. But look, the budget is an important part of a larger problem. And let me just cut to the chase for what it's worth. If I were president, what I'd do today is pick up the phone and call Chairman Powell and say, look, can you, I'm not trying to tell you what to do on interest rates. I just want you to hold off for a few days. And the second call I would make would be to congressional leadership, Republican and Democrat. And I'd get everybody at the White House. And if I were president, I'd tell Mr. Powell, look, I wish you would consider not raising interest rates this time. In the meantime, I'm going to announce that we're going to reduce the rate of growth of spending and debt accumulation to help you do your job. And I think you'd see markets settle down. I think you would see the banks settle down. And I think it's our best chance to cure inflation without destroying the economy and the banks.
Although this president has said he wants to give the Fed complete independence. Janet Yellen.
But that's not interfering with the Fed. I wouldn't tell the Fed what to do. I would say, look, would you come to a meeting? Do what you've got to do. But there's let me say it again, there's no way to solve the inflation problem without tanking the economy and the banks unless we reduce the rate of growth of spending and debt accumulation.
Well, some people might say, though, that's like asking for a pony for your birthday but not demanding one.
Yeah, exactly.
I want to jump ahead to call for number 5 here because Janet Yellen suggested that there may be more ahead when it comes to bank bailouts. Listen here.
Our intervention was necessary to protect the broader U.S. banking system. And similar actions could be warranted if smaller institutions suffered deposit runs that pose the risk of contagion.
Former Obama economist Mohamed Al-Arian suggested on my other program, America Reports, last week that they've set a precedent with SVB, and if any other bank is about to go under, they'll have to make depositors whole above and beyond the FDIC insured levels as well. So where are we going to get the money to do all this?
Well, we won't have it. And what you see going on now is an exercise in the federal banking regulators, and particularly the Fed, covering its rear end. Yep. They were responsible for this. I'll come back sometime and explain why. They're just covering their rear end.